In November of 2022, YieldMax started offering something most fund managers weren't. They were attempting to generate high yields, double-digit yields for income using a synthetic covered call strategy. In the first month, TSLY nosedives, right in line with Tesla. Maybe it was just bad luck. 6 months go by and TSLY briefly and slightly outperforms Tesla. Maybe the strategy is working, but at the 6-month mark, it's still down 4%. A year from inception, it's also slightly down, and sure, we could have reinvested our dividends to help offset the downside, but this is an income ETF. We're trying to take money out of the ATM, not put it back in and pay taxes every time we do it. If we look at the full history of the fund, we see that sometime in mid-2023, it gained positive momentum, lost its footing for the majority of 2024 until the end of that year where it started up again, and 2025 has been mostly down, but it is still up about 19% overall since inception. This has not been a cash cow for investors. MSTY, Coney, and NBDY were the largest winners of YieldMax's synthetic covered call strategy in the past, but clearly we see that TSLY has potential, and that is directly correlated to the performance of Tesla. The markets choose its winners. Every dollar in the system is a vote, and the markets eventually shift and new winners appear. There's charts and news, but have you seen what's happening in Austin? Hi, I'm Raj. On this channel, we talk about money, and I don't think people understand how big Tesla is going to be. You and I know that predictable cash flow is more important than ever, and on occasion, opportunities present themselves for higher rewards if we're willing to take higher risk. ETFs like MSTY are fun, but history shows us that this isn't going to last forever. The reality of high-yield funds from YieldMax and others like them is that they all have seasons. Sometimes they do better, and sometimes other options were the better choice. Eventually, the tides will shift, and early indicators are saying we're seeing one happening right now. This is the future of driving. Artificial intelligence and autonomous vehicles combining to give you a seamless driverless experience. Tesla is the leader in this future. A multi-trillion-dollar industry was just unleashed, and it's still misunderstood and undervalued, which is the perfect recipe for volatility, a necessary ingredient for high yields using covered call ETFs. Sure, some friendly rivals will appear regularly along the journey, but the biggest advantage Tesla has is the massive fleet, collecting data constantly, using it to improve their capabilities with every single ride. There will be errors, but also learning, which leads to improvement. The most significant technological leap, artificial intelligence, is already changing how we operate, and as of now, Tesla is the frontrunner in tangible applications using AI. If we want to keep up in this new world, it matters where we put our dollars. If you're skeptical about self-driving vehicles, remember when you got in late from a flight, called an Uber, loaded up the car, and as soon as you clicked your seatbelt, the driver looks back and asks, "Do you mind if we stop and get gas?" What are you gonna do? Call another Uber? Man, just take me home and start the ride from the gas station. Pretty easy to see the appeal of robo-taxis now. In the past 5 years, we've experienced a flight to safety. Higher interest rates seem to be the main item driving dollars to a concentrated handful of stocks, and it's not certain how long interest rates will remain high. But we know that if rates are high, money is expensive to borrow, which means we don't see confidence in riskier assets like Tesla. It doesn't help that Elon Musk is a polarizing individual, pros and cons, but the guy has a history of making it work and a history of making a ton of money. Since the markets choose their winners, how do we rationalize the performance of MSTY, NVDY, and Coney? The only theory I can suggest is the obvious rise of AI and the push for Bitcoin and digital assets as an asset class. Investors agree that AI is valuable, and in the early days, the best place to invest in it was the chip manufacturer NVIDIA, the thing that makes it possible. Now, the AI sector has broadened out, and basically everyone is using it in some way. Energy stocks might have been a good place to look at as well, given how power-hungry this tech is, and the recent election cycle has completely changed how policymakers are viewing cryptocurrency. The SEC has changed its regulation through enforcement approach. The Genius Act, which regulates stablecoins, was just passed by the Senate, and it's on its way to the House right now. And the president has a meme coin. Outside of these sectors, risk has been off. But I think you and I are in agreement that change is constant, and eventually the markets will broaden out, and there will be more winners. It's our job to see who those winners will be, and remember that the market needs a reason to place value somewhere when that shift happens. If you're considering TSLY with Tesla's recent developments, You're betting on being early for a shift in the overall market dynamic, and betting that the market will see more value in Tesla than at any point in history since TSLY was created. Timing these moves is incredibly difficult. Long term, personally, I am very bullish on Tesla and therefore TSLY, so it does, at least on paper, solve a problem in terms of sustainability, which I just can't see a solution to for some other very popular ETFs right now. But TSLY is still a risk for an income-oriented investor, especially since moving from something like MSTY, Coney, or NPDY means giving up significant yield for an unknown future result. Given the developments of Tesla and the concerns of sustainability of other income ETFs, it's certainly worth looking into. Are robo-taxis powered by AI a good enough campaign for market votes? Is there any room for solar and energy storage in this valuation, or are we still too early for that? Will the market need to see proof of revenue, or will speculators front-run it? What we do know is if we miss the move, we miss the profits. Bottom line, TSLY is behaving as we would expect it to given the trading strategy and Tesla's past performance. So now the question is it Tesla season? This channel has the ability to draw in some of the best investors with very valuable experience. So I would love to know your thoughts in the comment section. I'll see you there and of course in the next video. Have a good one.